Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a fantastic day. Quick look here at Bitcoin. See what's going on. We're going to double check a few key factors, such as some liquidation levels in the back end there, of course, last 7 days. We'll even go a little bit broader as well. Quick congrats to our community members for some awesome trade results. Keep up the great work, folks. Love it. I like that you're actually sharing some negatives too, because that's what trading is all about, right? You got to take the good with the bad, but obviously much more good than bad. So good trades this weekend. Congrats to our community members as well for a nice AVAX long over the weekend. 45% caught that breakout, and an older Litecoin trade, 115% came through as well. So Bitcoin, new all-time high. Congratulations on that. Awesome stuff. Hope you all have been filling your bags. This is really, really cool stuff here. What we want to do is verify a quick couple of things in the back end and kind of go from there. So here's the liquidation levels for the last 7 days. We can see a lot of shorts are concerned. Well, hold on. Let's pull this back out here. And what I want to do is kind of just mention here, if we look, this is about 3 or 4 days ago, a lot of shorts at 73,500. They're about to get destroyed. And again, those are people opening shorts over the weekend. And it's very common for people to open a lot of shorts with all-time highs. It's so normal. But you want to be careful with that too, because a lot of breakout trades are happening right now. So in general, right here we can see 74,000 as low as 73,000, heavy concentration liquidation, and of course shorts got wrecked at 70,900. So big surprise, not really all that surprising, honestly. That's more sarcasm, honestly. But generally speaking, that's where we're at there. Let's quickly look at the 1 month too. I don't think it's going to really tell us too much to the upside. It'll pretty much show us lower levels at 50,000, of course. Yeah, there have been some trades at about 73,000 for a while. So my guess is those are some low leverage positions there effectively. And if we take a look at the last 12 hours, we can kind of see it's pretty much just working within its range here, as low as 71.3, upwards of about 72.5. But again, longs keep prevailing, shorts keep getting destroyed. So that's common theme right now, folks. Not to say that you can't be successful with a short position. It's just, again, the market is moving up, and there's no reason to consider shorts really for the most part. There's going to be a few confirming factors, of course. I actually got a couple of signals this morning on some shorts that might be worthwhile, but we'll look at that a little later. So daily time frame. Let's actually verify the weekly, of course, here first, because we did actually get a candlestick closure last week above 66,000. That was an important thing. We've never had that before. This is a new territory for us. So a new weekly close above 66,000 reaffirms that as a new support, but also can just verifies the fact that we're obviously moving past that level. So if we take a look at a couple things here too, let's go ahead and double check the weekly time frame here with our stochastic RSI being overextended. Well, not overextended, but getting closer to the top, right? It would make sense for a pullback to occur in the relative near future. Now, with this being price discovery, all-time high stuff, anything can happen. We're going to have to, we might want to consider drawing some larger fib levels out to see roughly what the next target would be. But generally speaking, at this point here, we can see MACD, the RSI and money flow index all very high, and MACD is showing no signs of pulling back. So generally speaking, when you see this kind of behavior on the weekly, it's probably going to continue, all right? But we have had 3 pretty strong weeks here so far, so we'll see what happens, of course, later this week. I would say that we close this week above that 70,000 mark. There's a solid chance we're going to see a run up to the next fib level. Let's talk about that really quick just so you understand, as these fibs are drawn out from the most recent high, right here, about 69,000. Previous high, of course, not even the most recent, rather. And then all the way down to this 15,300 mark, which we came down to in December. So all of that momentum essentially has been swept. We've got a pretty solid cup pattern handle here, or cup pattern forming here, rather. And then what we could see, potential for a handle pattern to break down, pull back down to this maybe 61, 62K mark, and then take off from there. That's a possibility. A lot of times when you break all-time highs, you will see cup and handle patterns form. It's very common. Having said that, though, what I'm getting at here is that we have these fib levels already drawn out. So the next point of contact, if you will, is at 1.272 level at about 83,600. So we could see 83 to 84K as a rough estimate for the next target if the price continues to run. If it doesn't run, I would speculate we see some type of flag pattern form here and the possibility of the price action going lower from there. Okay, so in other words, we could see something along these lines as a general cup and handle pattern, how they typically break out. So anyways, a little premature to presume that will happen, but that is a possibility, right? We can't rule it out. But we're above all moving averages here. This ascending trend is working pretty concurrent. Let's go ahead and extend this out a little bit more, kind of see where we're at there. We'll just go ahead and keep an eye on that too. It's not a definitive line on the chart there, folks, but it is definitely a trend line nonetheless, okay? I know it seems to get a little confusing with all these blue lines here, but generally speaking, I'll clean this up later. But these are very important to note because these are all key levels we've seen in the past. And they could very well still be retested. Just because they're low in the 40, 50K range doesn't mean we can't still see that. I want you to get in your head that it is still a possibility for us to pull back to those levels, but it's a low probability at this point. ETFs are changing the games, folks. And there's a chance we may, once we break 100K, for example, if that were to be the case, we may never see that low again, right? So continue to just add to your bags just a little bit at a time. You don't got to get too crazy. As the price comes down, have larger positions, so to speak. Okay. Anyways, daily time frame, money flow index super high. That pretty much just reaffirms the fact that we're more due for a continuation to the upside. Stochastic RSI swinging up pretty strong here as well. It's also fairly bottomed out, or at least low, which is awesome. When you see a price continuing like this, and then of course you see stochastic RSI, essentially bouncing off that 30 range, it's cause for further upside. MACD is also giving us a little bit of an FU here when the price action is bouncing or continuing a little bit higher. So daily time frame, truly bullish, a big surprise, right? Same thing with 4-hour, confirming factors here all present. We're above all moving averages. We can see stochastic is getting closer to the top, so we might see slight pullback here soon, but money flow index super high, confirming the fact that we are probably going to be able to sustain this price and not go down. Again, money comes into a coin, folks. You got to respect the fact that it's going to stay there. There's a good chance that I think with 70 to 72K will be the new range until it continues to break upwards. There's less probability of the price breaking down at this point, just based on everything we've seen here so far. Now, can it break down? Of course, totally. It probably will. It'll do it when we least expect it. But we also need to recognize too that there's proof here in every single time frame that this continuation is happening. There's no other way around it. So again, be very, very careful opening shorts. I know some folks have done a lot of that over the weekend. At least with other communities more specifically. So it's just unfortunate to hear that. But again, I get it though, that we saw some false positives yesterday too as well. So either way you look at it here, daily time frame, 4-hour, even the hourly is giving us significant confirmation that the price is more likely to continue upwards. Everything is pretty much telling us the price has no reason to discontinue its progression. So don't be one of those folks that just shorts because it's overextended and hope you're getting lucky. If you do short right now, low leverage, low position size, I think it's a very bad idea though. So don't do it. Not recommended, not ideal whatsoever. So what is ideal, of course, is to practice patience. That's what we do in our community. We got a phenomenal community over here, awesome admins, and just a great situation. So please jump on over there, get to know our traders. We got an awesome group. And again, if you want to be part of that, cryptocash.tech is a site. Link down below. I do also have a course, a trading academy. More important, I teach you how to trade a little bit more successfully there. If you want to kind of see our success, check out last month's results. 100% profit. Well, sorry, 2,200% profit, 100% accuracy. And the truth is, this isn't always the case. We already hit a stop loss this month, but the general consensus is that you're going to be having more success taking longs if you see these positions versus shorts. Okay, shorts. While we did have a good 5 or 6 successful shorts last month, they were tight and they were not half as egregious as the or half as beneficial rather as the longs. So just get kind of into that mindset. We're in a long market right now, folks. Shorting is ill-advised. Thank you so much for watching. I hope you have a great rest of your day. Don't forget to hit the like button for me. We'll see you in the next one. Take care.